Hi everyone, good morning. Welcome back. You all can hear me? Can you all see my screen? All of you all? I'm audible, right? Clearly? Okay. Good morning, one and all. Now, today I'm taking the third session of our marathon for corporate accounting. Okay. So, I have already covered the few chapters in the previous marathons which I took, and today basically is our last marathon, and I am planning to do the ratio analysis which is a part of your given chapter. Okay. It is important because they ask you about ratio analysis at good 5 to 7 marks. Ratio analysis, otherwise also it is one of a very important management accounting sub chapter if you go to see. But they have now incorporated it as a part of your corporate accounting for the new syllabus. Okay, so corporate accounting marathon today, the last day as per the timetable which I had already given to you all. And for those who have not, you all have still not taken up the dream badge, please, it is my request, go ahead, subscribe to the dream badge, take it up. It is for a nominal value amount, and you will have access to all the, my all my lectures until the day of your, you finish your exams for this attempt in June. Okay, and my this marathon will help you do your revision for both new and old syllabus. Also the videos, in case you are not a part of this live marathon for the past few marathons which I have already completed, you can go ahead and check the video. All the links are in the description. Join the WhatsApp group also for the regular updates. Okay, and I'm there here to solve your doubts. Okay, any problem you all are having in any given question, any given solution or some theory part of your accounts and FM, I am happy to help. You all can message me and you all can ask me. Okay, cool. So today I'm going to begin with one very interesting also and small and interesting and a simple chapter, which is ratio analysis. Okay, now ratio analysis, I have noted down a few ratios. I'll be explaining all the ratios based on, there are certain sections that these ratios are based on capital, based on turnover, based on profit. So I have bifurcated those ratios, and I'm going to explain you all the ratios. More importantly, I will solve a few sums along with you all, but explaining the ratio is important. Why? Because any given question in the paper, if you have understood the ratio, you'll be able to understand the question and then put that formula accordingly. Okay, it is not possible to mug up all the ratios and all the formulas, so I have divided them for your better understanding. Okay, now first is the profit margin related ratio. They are also known as the sales ratio. Okay, all the ratios which are based on the turnover of the organization. Okay, so first is gross profit, everything related to profit. So if I'm talking about a gross profit margin, I mean to say how much is my gross profit over my sales. Okay, the percentage. If I'm talking about my net profit margin, I am talking about my net profit after tax upon sales, or net profit before interest and tax also, in that matter, upon sales. We can do as per the question being asked. Okay, then we have operating expenses ratio, day to day expenses, which we do same thing, operating expenses upon sales into 100. And there is an operating ratio. It is different from your operating expenses. Why? Because in the operating ratio, we also take into consideration the cost of goods sold, the direct expenses. Okay, so along with operating expenses, when I talk about the COGS, which is a part of my operating cycle, then divide that by the sales, I will get the operating ratio Operating expense ratio is only taking the expense, divide that upon the sales into 100. Okay, so you have your gross profit, net profit ratios, higher the better, and expenses related ratio, lower the better. Okay, moving to the next set, B, capital ratios. Okay, based on the capital employed in a organization, shareholders funds, borrowed funds, whichever way. Okay, so when I am talking about return on capital employed, it is also known as return on investments. So how much profit before interest and tax am I making upon my capital employed into 100? Okay, so NPBIT is before your long term and short term borrowing interest. Okay, and capital employed is nothing but the shareholders funds plus borrowed funds. Then if I talk about return on the net worth, at that time I will take my profit after tax upon my shareholders funds, because return on net worth is basically the return on the shareholders funds. First formula was return on the entire capital employed, whether shareholders or whether borrowed funds, owned plus borrowed. Net worth, when I'm talking about the net of net profit after tax upon the shareholders funds. Then we have return for equity only. So whatever profit is available for equity shareholders, divide by the equity shareholders funds, I will get return for equity. And return on the total assets will be your NPBIT upon your total assets. Long term borrowing before long term borrowing interest. Okay, so NPBIT upon total assets will give you return on the total assets. In the questions, they might ask you find the return on the total assets on net profit after tax. So you will do it accordingly. Okay, so they might modulate the question for a given formula. You can find ratio of anything. These formulas are not exclusive. Okay, there are many other formulas which can be there. Okay, I am giving you an understanding of the ratios. Now see, if I want to know about this interest and tax, etc. So first I have my gross profit. This is my statement. Okay, then from there I will less my operating expenses and add my operating income, other operating income. I'll get net profit before interest and tax. First I will subtract my interest on short term borrowings like overdraft facility or anything which is so short term. I'll get NPBIT. Then I will subtract my interest on my long term borrowing, NPBT. I will subtract my tax, NPAT, minus preference dividend, net profit for equity shareholders, minus equity dividend, net profit transferred to the P&L account. Now generally this interest related thing, they never give any bifurcation. So I will consider a basic NPBIT. Okay, clear? Now liquidity ratios, very important. Okay, short term ratios, liquidity. Okay, how much is the working capital in the organization? Okay, so liquidity ratio, the first one is a current ratio. Current ratio is nothing but all the current assets upon current liability. Standard ratio is 2:1. That means your current assets should be 2 times of the current liabilities at least. This is the standard. You may have it before above or lower than that, but this is the standard. Liquid ratio, which is known as a quick ratio. Liquid ratio means the most liquid assets, like right now they can be converted into cash. So we have current assets minus stock. Stock takes time. Prepaid expenses is not really an asset, correct? So therefore I remove my stock and prepaid expenses from my current assets, and in current liabilities I remove my bank OD. It is not that liquid liability. It is like a loan. Okay, it is going to be there for a given period of time. Correct? So standard ratio over here is 1:1. Then we have one absolute cash ratio. Absolute cash ratio is cash and cash equivalents, means cash in hand, cash in bank, plus your short term investments upon your current liability. Actual how much cash you have in hand. Okay. And defense interval ratio is the same thing. Cash plus cash equivalents plus your short-term investment divide by your daily operating expenses. How much cash and cash equivalent you have to absorb or to fulfill your daily operating expenses, you will get this answer in days. In days. Why in days? That it will show you that my daily operating expenses are being able to clear with the help of my cash in so and so days. 2 days, 3 days, 4 days, whatever is the answer. Okay. Next. Then we have stability ratio. Okay. Long term ratio. When we did liquidity ratio, short term ratio, stability shows your long term ratio. So we are going to consider everything in the long term. Okay. So first important is your debt equity ratio, long term, no? Borrowed funds upon shareholders funds. Standard is 2:1. Capital gearing ratio is your fixed return bearing security. So fixed return bearing security can be debentures, it can be bonds, then it also can be preference share capital. Okay, so basically I say borrowed funds plus preference share capital divide by security not having fixed return. Which security does not have fixed return? Shareholders funds minus preference share capital. Okay, so if you have total shareholders funds and they have also given you preference share capital, so basically only equity shareholders funds, in short, is that security which does not have any fixed return. Okay, these are very rarely asked, but I have given you all so that you know it. Okay, then you have a proprietary ratio. Proprietary ratio means shareholders funds total you have got with you to the how much of total assets you have across that shareholders funds. Proprietary ratio, your shareholders funds, how much you have used them against your total assets. Okay, so standard ratio here is 60% to 70%. Next is your turnover ratios again, okay, based again on your sales. So when I tell you capital turnover means sales will come in the numerator. Whenever I talk about turnover ratio, sales will come in the numerator. So capital turnover ratio means sales upon capital employed. This ratio will always be in times. Total asset turnover ratio, sales upon total assets. Fixed asset turnover ratio, sales upon fixed assets. Simple. Debtors turnover ratio, how much time am I getting, my debtors converting. Okay, so that is credit sales. Debtors can be generated only on credit sales. Divide by average debtors. Average debtors includes bills receivable only. Also, so average of debtors plus bills receivable. Average means what you have opening, closing. So you will take an average of both. Stock turnover ratio, cost of sales, cost of goods sold, COGS upon average stock. Creditors turnover ratio, same thing, credit purchase upon average creditors plus bills payable. Debtors velocity or debtors collection, how much time it is taking for me to collect payment. We had done this even in working capital management, correct? So debtors collection period is your average debtors. You will just kind of convert the debtors turnover ratio. Okay, so debtors velocity ratio or debtors collection period is nothing but your average debtors upon your credit sales into, if it is given for months or for days or for weeks, so you will multiply accordingly, 12, 52 or 365. Lower the better, that means I am able to get money faster from my debtors. Stock velocity ratio means stock holding period. How many times or months or days is my stock lying before it is getting sold. So average stock upon COGS into 12, 52 or 365 as the case may be. And creditors velocity will be average of my creditors plus bills payable upon my credit purchases into 1250 to 365. Higher the better. That means I'm getting more time to pay my credit. Okay. Then we have market test ratio or investors based on investors returns ratio. First most important is earning per share. This they ask only. So earning per share is nothing but the net profit available for the equity shareholders upon total number of shares. Earning per share is always in rupees. Then dividend per share ratio means total dividend you have given to your amount. Total dividend for equity shareholders upon total number of equity shares. Again that will be in rupees. Dividend payout ratio means total dividend which you are going to give, the amount upon the net profit which you had balance. Okay, whenever the company has profit, some profit they transfer to reserves and some they give dividend, retained earnings and some dividend payout. Okay, so the total dividend for equity shareholders upon the profit which you had, into that you will get your dividend payout ratio. Price earning ratio means what is the market price of the share currently upon the earning per share which the company is giving me. Okay, so say my market price of the share is 100 and earning per share is 10. So 10 times means I will have to earn 10 times more in order to reach to this market price. Okay. Dividend yield ratio is dividend per share upon net market price of the share. Higher it is better. Earning yield ratio, earning per share upon market price per share. Higher the better. Both dividend yield ratio and earning yield ratio. Clear? Okay. Then we have one format which I already have shared many times. We have NPBIT. From there we minus interest. We get NPBT, tax, net profit after tax, minus preference dividend, net profit for equity shareholders, minus equity dividend, amount transferred to P&L. Sales is nothing but COGS plus gross profit. Working capital is current assets minus current liabilities. And if say borrowed funds is 0, then you have one more formula. Shareholders funds minus fixed assets can also give you working capital. Only if borrowed funds is 0, means that company has only own funds. They have not borrowed capital. They have not taken any loan or debentures or nothing. So if there are no borrowed funds in a given company, then for working capital we have one more formula. Shareholders funds minus fixed assets will also give you working capital. Average stock, opening plus closing divide by 2. How do I find my COGS? Opening stock plus purchases minus closing stock, and net worth means the shareholders funds. Okay, then you have certain coverage ratio, means interest coverage ratio. How much profit before interest and tax I have to cover my interest. It will be in times. Preference dividend coverage ratio, net profit after tax upon preference dividend times. Equity dividend coverage ratio, same thing. Net profit available for equity upon equity dividend. Okay, whatever coverage I am doing, that will be in the denominator. Okay, that will be in the denominator. Whatever coverage I am trying to see. And it will be upon the numerator will be profit. Okay, so preference dividend comes just after net profit after tax. Correct? So it will be net profit after tax. Interest coverage ratio is just after interest is after NPBIT. So this is how you are going to remember the formula. Dividend, equity dividend coverage ratio, net profit for equity upon equity dividend. And total dividend coverage ratio will be your NPAT upon equity dividend plus preference dividend. Okay, so these are just additional certain formulas which I have given. They don't ask this often, but you can always have this, know this, understand it, and if they happen to ask, you are ready to answer it. Then your debt interest service coverage ratio. Debt interest service coverage ratio means how much of actual cash you have. So NPBIT, add back your depreciation because it is a non-cash expense, minus your tax. Tax is actually you have to pay. Divide that by interest plus installment of the principal, the EMI amount. Okay, interest plus whatever is your principal, installment of your principal. So this basically total is your EMI for your loan. Okay, so these are the formulas which we are going to keep in mind. Okay, keep it aside, and accordingly we are going to solve the sums. Clear, everyone? You all have any doubt? You all want to ask any questions? So give me 2 minutes before we just start the sums. Okay. Okay, everybody. So should we move forward? We'll start solving the sums. Okay, come on. Let us read the question. The following data of Vishal Limited is available for the year ended 31st of March 2007. We have 20 lakh equity shares of rupees 10 each. So amount in lakhs is 200 lakhs. General reserve, investment allowance reserve, provision for dividend, provision for tax, 15% long-term loan, and then we have profit before taxes 140 lakhs. We have to find, calculate capital return employed and return on net worth. Okay, we are supposed to find this too. So let us first write the formula. They are asking me return on capital employed. I had told you all the formula. Return on capital employed will be NPBIT upon capital employed into 100. And the next one they are asking me return on net worth. Return on net worth. Net worth is nothing but the profit which is left after tax upon the shareholders' funds into 100. Okay, so I need to know my NPBIT, I need to know my capital employed, NPAT and shareholders funds. I'll be able to find the answer. Okay, so I'll solve it later. First we will do the working note. Okay, working note. First, NPBIT. Okay, NPBIT, I do not know. They have not given me my NPBIT. Have they given me? No, they have given me profit before tax. Okay, 140. And they have given me provision for tax. Alright. So what I will do is NPBIT minus interest. Right. I will get my NPBT minus tax. Correct. I'll get my NPAT. Now NPBT they have given me. And tax also they have given me. So whatever is given, at least that much I will write it. Okay. Tax, if you see, they have given you 84 lakhs. And NPBT they have given you, profit before tax they have given you 140 lakhs. So when I go opposite, okay, I am going reverse. So I will add it, okay. Or when I am going, whenever I want to go reverse, I am going to add, correct. Otherwise I'll subtract. But net profit after tax is 140 minus 84. So at least this I got it. 56. Done. Interest also actually they have given me at the rate of 15% on 300 lakhs. See, they have given me interest 15% on 300 lakhs. So that is going to be 45 lakhs. Right. So actually this is minus interest. To get my NPBT, I will go reverse. So for reverse, I will add this to this 140 plus 140 plus 45 will give me 185 will be my NPBIT. Okay. Now I need to know how much is my shareholders funds. So shareholders funds will be share capital, equity share capital or share capital total plus reserves and surplus. Now in share capital I have my equity share capital 200 lakhs plus, see, 200 lakhs is my equity share capital plus I have my general reserve and investment allowance reserve. Only these two reserves are there. So my shareholders funds will be, reserves and surplus will be 150 plus 50. This will become 400. And capital employed will be shareholders funds plus borrowed funds. Shareholders funds I just found out 400. Borrowed funds they have given me, it is 300 lakhs. So this will become 700 lakhs. So I have all my inputs. I have to just put that in the formula now. So NPBIT is going to be 185 upon capital employed is 700 into 100. And NPAT I found out it is 56 upon shareholders funds is 400 into 100. Okay. So this is going to be how much percentage? 185 divided by 700. It is going to give me 26.43%. Just do it. 185 divided by 700. 46.42 something. I have rounded off to 43. And this is 56 divided by 400. Percentage 14%. Clear everyone? Okay, you all can take a screenshot of this if you all want to. Here, the answer. Okay. Chalo. Now I am moving to the next question, which is question number 2. From the following balance sheet, you are required to calculate quick ratio, current ratio, quick ratio, inventory turnover ratio, average collection period, presuming 360 days, own funds to the liability ratio. Okay. Sales credit for the year is 4 lakhs, gross profit is 1,60,000. Alright, we will start with quick ratio first. Okay. So, question number 2. Okay, answer 2. They are asking me first is my current ratio. What is the formula of current ratio? Current assets upon current liabilities. Is not that given in the balance sheet? Current assets, which will be my current assets from here? Stock, debtors, cash and miscellaneous current assets. So I can total it, all of them, and my current liabilities will be debentures, bills payable and other current liabilities. Right now. So it will be 80,000 plus 45,000 plus 17,000 plus 8,000. So I have my current assets as 1,50,000 and my current liabilities is 40 plus 20 plus 2. So it is 62,000. So this is going to be 2.42:1. Current ratio is done. Right? Okay. So current ratio will be current assets is equal to 1,50,000 divided by current liabilities is 62,000. So this is going to be 2.42:1. Okay. Second one is my quick ratio or liquid ratio. In quick ratio, you say current assets minus stock minus prepaid expenses, if any. And in current liabilities, you will say current liabilities minus bank OD. Okay, I am solving this here only. Now we all know that current assets is 1,50,000. Stock as given in the sum is how much? How much is the stock amount? 80,000. There is no preliminary expense or something, and there is no bank OD also. Okay, so 1,50,000 minus 80,000, right? There is no prepaid expenses. And in current liabilities minus bank OD, there is no bank OD also. So this is also going to stay 62,000 only. Nothing is going to change here. Okay, so 1,50,000 minus 80,000, 70,000 divided by 62,000. So you will get it 1.13:1. That will be the quick ratio. Okay, then what is the other ratio which they are asking me? Come on, even you all try to solve it by yourself. Huh? It is very, very easy. Now they are asking me inventory turnover ratio, average collection period and own funds to liability ratio. Okay, now inventory turnover ratio. I am solving this so that you all can also solve with me and can have the answers ready with you. Now inventory turnover ratio means stock turnover ratio. Means what? COGS upon average stock. Now we don't have anything like average stock, but COGS we can find. They have given me my sales minus my gross profit. They have given me my gross profit also. Average stock is how much? 80,000 only. If there is nothing given, I'll take 80 only. Sales they have given me 4 lakhs and gross profit they have given me 1,60,000. Divide by 80,000. So this is going to be 3 times inventory turnover ratio. Okay. Now debtors collection period they are asking me. Debtors collection period. So that is going to be my average of my debtors plus bills receivable upon credit sales. Into I will take 360. They have told me to take it 360. Now average debtors plus bills receivable. I have not got anything like opening closing. So whatever is there with me in the balance sheet I will take. In balance sheet there is only debtors. Okay. 45,000. And this sales credit they have already given me 4 lakhs. So both amount I have with me I will just put it in the formula. That's it. Okay, so average debtors is 45,000 and credit sales is 4 lakhs into 360. Solve it. 45,000 divided by 4 lakhs into 360. So it is basically approximately 41 days is the debtors collection period. Next one is they are asking is owned funds to liability ratio. Okay. Now owned funds to liability ratio means they are asking a specific kind of ratio. This is not there in what I have shown you all the different formulas. They are asking me this ratio, means they are telling me to find own funds means shareholders funds upon total liability. Okay, so your shareholders funds means your share capital plus reserves and surplus. Okay, so let us first find that how much it is. Share capital plus reserves and surplus will be my own fund. So this is going to be my 2,58,000 will be my own funds upon my total of my liabilities. Now total of my liabilities means I have done my total liability side 4,20,000. Okay, you might say that ma'am, liabilities will be debentures, creditors, bills payable, other current liabilities, right? Even that is correct. Okay, liability ratio, own funds upon liability. Here I have taken the total liability side. We can also take it 2,50,000 divided by the only liabilities. Just solve this. Give me a second. Okay, you all could solve it. What is the answer? You all got it? Total shareholders funds is 2,58,000. Right? Total liability I have taken 4,20,000, means shareholders funds plus but other liabilities. So I am getting 0.61 is to 1. Clear everyone? Any doubt you all have so far? You want to ask any question? Okay, the last ratio is something which is very unique. They are asking for something different. You will do it in this manner. Whatever ratios they have asked for, you will have to give the answer in that manner. Okay. So if in case you all have not done the sum along with me, just take a screenshot quickly for this two, quick ratio and current ratio, and then take it for this inventory turnover ratio and debtors collection period. And last is your own funds to liability ratio. These sums you can definitely solve along with me. Okay, chalo. Now I'm moving to the next one. Okay. ABC, third sum. ABC has made plans for the next year. It is estimated the company will employ total assets of rupees 8 lakhs. For that, 50% of assets will be financed by borrowed capital, which will have an interest of 16% per year. The direct cost for the year is estimated as 4,80,000 and all the other operating expenses are rupees 80,000. The goods will be sold to the customers at 150% of the direct cost. tax rate is 50%, we have to find net profit margin ratio, return on assets, asset turnover ratio, and return on owner's equity. Now, in order to find all these ratios, I'll have to first make my income statement. Okay, now solve the income statement now. Question number 3. 8 lakhs rupees is my need. I have to employ certain assets. For that, I am going to do funding. Funding of 4 lakhs will be borrowed funds and balance will be equity fund, own funds. Okay, own funds. Right? 50%, 50% they have told me now. And this borrowed funds will be at the rate of interest of 16%. So basically on 4 lakhs I will pay 16% interest, which will be 64,000. Right? They have told me direct expenses is equal to 4,80,000 and we are selling goods. Sales is 150% of this direct expense. So 150% of 4,80,000 is 7,20,000. Okay, so I have got my few inputs. With that I will make my income statement. Okay, so start making the income statement. It will be sales 7,20,000. Okay, minus COGS. COGS is nothing but your direct expenses, which is how much? 4,80,000. So you will get your gross profit. Gross profit is 2,40,000. Minus operating expenses. They have already given me my operating expenses is 80,000. Add operating income. They have not given me anything of such. Okay, so 2,40,000 minus 80 will be 1,60,000. That will be my NPBIT, net profit before interest and tax. From there I will minus my interest, which I calculated. It came as 64,000. Okay, 16% on 4 lakhs. Net profit before tax, that is going to be 96,000. Minus tax, which is at the rate of 50%. So 48,000. So my net profit after tax will be 48,000. Clear everybody with the income statement? Okay, now based on the income statement only, the ratios which they are asking me, one is return on, first one is net profit margin ratio. Okay, net profit margin ratio. So net profit margin ratio will be on what? Net profit after tax. Net profit they want, no? So net profit margin ratio means upon sales into 100. Net profit after tax is 48,000. 48,000 divided by 7,20,000 into 100. It will give you some 6.67% of net profit margin. Second, they are asking me is return on assets. Okay, return on assets means NPBIT. We have done this formula upon total assets into 100. NPBIT, I have it over here in my income statement, 1,60,000. Total assets, I know it is 8 lakhs. For that only we did all the funding, na? 8 lakhs into 100. That will give me 20%. Then they are asking me asset turnover ratio. Asset turnover ratio. These turnover ratios, sales will be on the numerator, sales upon total assets. Okay, so how much is the sales? 7,20,000 upon total assets is 8 lakhs. These ratios are in times, turnover ratio. So it is 0.9 times. And last, I think they are asking us return on equity. Return on equity. Equity return I'll be able to come to know only with the net profit available for equity shareholders. Net profit for equity shareholders upon equity shareholders funds. Okay, into 100. So net profit for equity shareholders will be the same as net profit after tax. There is no preference capital here. So this entire 48,000 belongs to the net profit as equity shareholders, and equity shareholders funds I know 4 lakhs I am doing through own funds. So I am taking 4 lakhs over here. Into 100, that will give me 12%. Clear everyone? Nice sum. Okay, take a screenshot of this. Come on. Even the taken. Chalo, I'll move forward. Now, until now we were doing with the help of all the givens and statements, and with the balance sheet we were finding the ratios. Now we will do reverse. They will give us the ratio and they might ask us to find a given balance sheet item or a P&L statement item. Okay, so let us solve and practice 1-2 sums on that. Okay, Chalo. Following information is given of ABC Limited. They have told me my working capital is 1,20,000, reserves and surplus is 80,000. Then they have given me bank OD as 20, fixed asset proprietary ratio is 0.75, current ratio, liquid ratio. From all this, I want to find current assets, current liabilities and stock. Very nice. It's a very, very simple sum. Okay. Chalo, I will do it over here only. I will just erase it a few things. And here only we will solve it. Okay. Come on, you all, if you all know, you all can start solving and give me current assets amount. Okay. So now they are telling me I want to find current assets and current liabilities. Now to find current assets or current liabilities, I will use my current ratio they have given me. Current ratio is nothing but current assets upon current liabilities, and they have told me that is 2.5. So I can say current assets is equal to 2.5 times of current liabilities. Then they have given me anything else? No. So what I can do is I can use my this working capital. Okay, working capital is nothing but current assets minus current liabilities. Working capital is 1,20,000. Instead of current assets, I am writing 2.5 times of current liabilities. Okay, so 1,20,000 will be equal to 2.5 minus 1 will be 1.5 of current liabilities. So 1,20,000 divide that by 1.5. That will give me my current liabilities. Current liabilities is 80,000. Therefore, current assets will be equal to 2.5 of 80,000. So my current assets is going to be 2 lakhs. So I got my current assets. I got my current liability. Okay. So 2 things is already solved, current assets and current liabilities. Now they are asking me my stock amount. So they have given me my bank OD, then they have given me my fixed asset proprietary ratio. Okay. Bank OD is useful. Why? Because we know, no, this particular formula we know. What is the quick ratios formula? They have given me the quick ratio also. So I am going to use that quick ratio. Okay. So liquid ratio is nothing but current assets minus stock minus prepaid expense and upon current liabilities minus bank OD. I know my current assets. I just found out 2 lakhs. I do not know my stock. Okay. So stock I am assuming it to be X. But my liquid ratio I know, na. Liquid ratio they have given me is 1.5. Current assets is 2 lakhs. Stock X. There is no prepaid expenses, 0. Current liabilities is 80,000 and bank OD is 20,000. So I will do 1.5 into 60,000. I am taking this 60,000 up. That will be 2 lakhs minus X. Clear now? So now solve this, no, at least. This is an equation. You have to just solve the equation now. So simple. Okay, 60,000 into 1.5, 90,000. Sorry, 90,000, not 9 lakhs. 90,000 minus 2 lakhs. I am taking this 2 lakhs on the other side. Will be equal to minus X. So minus 1,10,000 will be equal to minus X. Minus and minus sign cancel. Therefore, X will be equal to X is stock. Will be equal to 1,10,000. Clear everyone? Simple, easy, no? You had to just use the ratios in order to find the given items. Okay, so this also you all can just take a screenshot of here. This is the answer. Okay, answer number 4. Come on, next one. Last sum this is. We will be doing some more practice questions, past exam based. From the information of XYZ, find the below amount of sales. We want amount of fixed assets, capital employed, debtors and creditors, purchases, opening and closing stock. They want everything. They have given me stock turnover ratio, fixed asset turnover ratio, capital turnover ratio, gross profit margin 20%, debtors collection period is 2 months, creditors payment period is 73 days, gross profit was 60,000, closing stock was 5,000 in excess of opening stock. Okay, so let us find this. I am solving it in separately over here. Okay, answer number 5. I'll start with whatever is given to me. Gross profit margin they have also given me, which is 20%, and they have told me gross profit is also 60,000. Okay, so based on this gross profit margin ratio, gross profit upon sales, right? So gross profit margin is 20%. Gross profit is 60,000. Sales I can find, no, with this. So sales will be equal to 60,000 upon 20%. That will be 3 lakhs. So I got sales. Now with the help of the sales is nothing but COGS minus gross profit. I have sales 3 lakhs. I don't know my COGS. I have my gross profit given to me as 60,000. Therefore, COGS will be equal to 3 lakhs minus 60,000. So it will be 2,40,000. Okay, so I got my sales amount, I got my COGS amount also. Okay, so sales is 3 lakhs. Then I got my COGS as 2,40,000. Sales and COGS is done. Okay, now the next one. Fixed asset turnover ratio they have given me. Fixed asset turnover ratio. So I now know my sales, no? So sales upon fixed asset. They have given me this ratio is 4 times. Sales I know it is 3 lakhs. Fixed assets I can find. Fixed assets will be equal to 3 lakhs divided by 4, which will be equal to 75,000. So I got my fixed assets also. Fixed assets is 75,000. Then they have given me my capital turnover ratio. Fourth, capital turnover I got now. Sales I got now. I can find everything. Capital turnover ratio is nothing but sales upon capital employed. This ratio is 2 times. Sales is 3 lakhs upon capital employed. Therefore, capital employed will be equal to 1,50,000. No, 3 lakhs divided by 2, which is equal to 1,50,000. So easy, no? One thing you will find, everything else will come in its place. You have to just use, a little bit of your knowledge of ratios. When they are asking you something, no, first start with whatever given you have. And when they have given you only this turnover means you need sales, no? And for sales, they have given you gross profit. So try to connect the dots. Okay, connect. Next one they are asking is, debtors collection period. No, they have given me debtors collection period. Okay, so debtors collection period. What is that? Average of debtors upon credit sales, right, into the months will be 12, 365 or 52 if in case it is weeks. They have told me it is 2 months. So that is why I have done by 12. Average debtors I don't know. Credit sales I am assuming my entire sales to be on credit. So sales is 3 lakhs into 12. Right. So this will be 2 into 3 lakhs. Divide by 12 will give me my debtors. Okay. Will give me my debtors, which is going to be 50,000. Okay. So debtors is done with the help of the average collection period. Now I am doing my creditors with the help of the creditors payment period. Okay, so creditors payment period. It will be creditors. Okay, average of creditors. I don't have any average. Upon credit purchases, into here I'll do 365 because they have given to me in days form. 73 days. Average creditors I don't know. Okay. Now credit purchases also I don't know. But I'll tell you how to find that. See. We know COGS. COGS is always what? Opening stock. Okay. Plus purchases minus closing stock. Now you will say, ma'am, we don't even know this. No, we know it. They have told me that the closing stock is 5,000 more than the opening stock. So assume the opening stock to be X. assume it to be X. Okay. COGS I know. 2,40,000 I had solved initially only. Purchases I still don't know. Okay. Minus closing stock will be X plus 5,000. So 2,40,000, I'm just solving the equation, pay attention. Will be X plus purchases. When I'll open the bracket, it will be minus X minus 5,000. Minus and plus is always minus. So minus X minus 5,000 plus X minus X cancel. So 2,40,000 plus 5,000 will give me my purchases. So this purchases, when I will put it over here, 2,45,000, and then when I will solve it, it will be like 73 into 2,45,000 divide by 365 will give me my creditors. So my creditors amount is 49,000. Clear everyone? For creditors, I also needed to know my purchases. Purchases I could find with the help of the COGS formula. Okay. Now, so COGS, I will say it is part of this solutions. So number 7 was the formula which I used. Now last one is the stock turnover ratio. Stock turnover ratio means what? COGS upon average stock. Because stock is always valued at the cost, not at the sale price. So we take COGS upon average stock. Now stock turnover, they have given it to me. Average stock, COGS I know it is 2,40,000. I will get my average stock. That will be 2,40,000 divided by 6. So it is going to be 40,000 average stock. Now, if you see with the help of average stock, and I had also written somewhere, let opening stock be X. So average stock means what? Last formula. Average stock means what? Opening stock plus closing stock upon 2. Average stock I know it is 40,000. Okay. Into 2, I am taking this 2 on the other side. Opening stock I have assumed it to be X. So closing stock will be X plus 5,000. So 80,000 minus 5,000 will be giving me 2X. So 75,000 divided by 2 will give me X. Therefore, X, which is opening stock, will be equal to 75,000 divided by 2, 37,500. Okay, 37,500. Therefore, closing stock will be 37,500 plus 5,000. That will be 42,500. Okay, everyone, clear? Come on. You all can take the screenshots as you all want. First, you all can do it for this gross profit ratio. With the help of that, I could get COGS. Okay. Then you have fixed asset turnover ratio and capital turnover ratio. With that, I'll get my fixed assets and my capital employed. Then we have debtors collection period and creditors payment period, both. With the help of that, I got my debtors and my creditors. For creditors, I applied my COGS formula to get my purchases. Okay. With the help of my purchases and my stock turnover ratio, COGS, everything. Now see this. I got my average stock. With the help of average stock, I got my opening and closing stock. Okay, everyone. Now I'm just doing some few past exam questions which I have. Okay, though they are in the form of MCQs, but even for the new syllabus, they are going to ask you in the same manner where you will give the proper working and you will get marks for the formula. Keep this in mind. Okay. N Limited has net working capital of 119 lakhs. Okay, so basically their working capital is 119. They have total liabilities of 225 and their non-current liabilities is 140 lakhs. The current ratio will be what? For current ratio, I need current assets upon current liabilities. Okay, so I am just writing this here. Current ratio is nothing but current assets upon current liabilities. Current assets will be what? Net working capital plus current liabilities. I'll add my current liabilities to my net working capital. I'll get my current assets. No. Working capital is nothing but current assets minus current liabilities. Okay. So working capital plus current liabilities will give me my current assets. This is only what I've done. I've not done anything new. Upon current liabilities. Now current liabilities, I'll keep it here as it is. Okay. Now tell me, net working capital they have already given to me, it is 119 plus my current liabilities. What will be the amount of my current liabilities? Basically 225 is the total liabilities. From that, non-current is 140. Therefore current liabilities will be 225 minus 140, 85. So I'll do 85 here and 85 over here. Okay, so I'll get my current ratio as 204 upon 85, which will be equal to 2.4:1 here. This was your first sum. You all want to take a screenshot? I hope you all are solving with me. These ratio sums, you all don't need to take any screenshots. Okay? But you all can, if since the question is also there. Okay, next sum. Mahi Limited has a closing stock of 648 lakhs and they have prepaid expenses of 32 lakhs. The total liquid assets were 1830 lakhs. If the liquid ratio is 1.5:1, then what is the working capital? Okay, fine. Now liquid assets they have given me, they have also given me the closing stock and they have given me the prepaid expenses also, and they have told me the liquid ratio also. So liquid ratio is nothing but liquid assets upon liquid liabilities. Okay, liquid assets upon liquid liabilities. Okay, liquid ratio they have given me 1.5. Liquid assets is nothing but current assets minus stock minus prepaid expenses upon current liabilities minus bank OD. Okay. Now 1.5. Now liquid assets they have already given it to me. No, so I am writing it 1830. And there is no bank OD, so here I am keeping it current liabilities down over here only. So current liabilities will be 1830 upon 1.5. Current liabilities will be 1220. Now they want working capital. Working capital के लिए I will need current assets. Okay, now for current assets it is very easy. Now current assets will be equal to liquid assets plus stock plus prepaid expenses. Liquid assets they have already given me. Stock also they have given me 648. And they have also given me prepaid expenses 132. Everything is just given. It is 32. Sorry. It is 32. Prepaid expenses. So I got my current assets also. 1830 plus 648 plus 32. 2510. So I have got my current liabilities. I have got my current assets. Therefore, working capital will be equal to current assets minus current liabilities. 2510 minus 1220. That will give you 1290 lakhs. Clear? Easy? Easy peasy it is. Simple. Just if you will start the sum correctly, everything will start flowing. Okay, next question. From the details of Beta Limited, the amount is given in lakhs. Equity share capital, preference share, debentures, profit before interest and tax, dividend payout ratio is 70%, price earning ratio is 25%, corporate tax is 30%. I need to know my earning per share. For earning per share, I need to know the amount of profit available for equity shareholders. Number of shares, so I know how much it is. 150 is the number of shares. 1500 lakhs divided by 10. Value of each share is 10. No? So number of shares will be 150 shares. Okay, 150 shares. For earning per share, I will have to know my net profit available for equity shareholders. Now they have given me my NPBIT. How much have they given me? 590. Okay, from that I will minus my interest. 12% on debentures, 250 into 12%, 30. I'll get my NPBT. That was going to be 560. From there minus tax, which is at the rate of 30%. 168. Okay, so I'll get my NPAT. So 560 minus 168, 392. Minus preference dividend. There is preference share capital, no? So preference dividend is 8%. See this 8% on 400 lakhs. So on 400 into 8%, 32. So this I will have to subtract. So profit available for equity shareholders will be 360. Profit for equity shareholders. Therefore, earning per share will be net profit for equity shareholders upon number of equity shares. 360 divided by 150. 2.4 rupees per share. Per share. All this is important. Huh? You all have to write all this. Per share, times, percentage, days. Okay. Now the next one. From the following information, calculate net profit ratio. Okay, gross profit is 1/4 of the cost and sales is rupees 2 lakhs. Indirect expenses is 12,000 rupees. Okay, so they have given me sales, they have given me my indirect expense. Cost plus profit is equal to sales, we know. Now 1/4 means what? 25% na of cost. So I will assume cost to be 100, profit will be 25. Always remember this, whenever a profit is on the ratio of cost, as a ratio of cost, assume cost to be 100. If it is at a ratio of sales, assume sales to be 100. You will never go wrong. 1/4 means how much percentage? 25%. No. So on cost, so cost 100, 25 will be my profit, sales will become 125. So sales amount I know it is 2 lakhs. So how much will be my profit and how much will be my cost? Cross multiply. 2 lakhs into 25 divide by 125. Profit will be 40,000 and cost will be 1,60,000. Okay. So now with the help of this cost, this is my cost and this is my gross profit basically. So my net profit will be equal to my gross profit minus my indirect expenses. Gross profit is 40,000. Indirect expenses they have given me is 12,000. So it is going to be 28,000 as my net profit. Net profit margin ratio will be, net profit margin ratio will be nothing but net profit upon sales into 100. Net profit is 28,000. Sales is how much? 2 lakhs, no? Into 100. It will be equal to 14% of net profit margin. Clear everyone? This is a very, very important formula. Cost plus profit is equal to sales. I use this every time and I don't go wrong. Use it. It is very simple to then crack the profit and the cost. It will never go wrong with the help of this. Okay. Chalo next. The following information is pertaining to A limited current ratio. Acid test ratio means liquid ratio. Liquid ratio. Or quick ratio. And current liabilities they have given you. Find out the value of inventory. Now this is so simple. Come on, try. It is very easy. Start with the current ratio. Current ratio is current assets upon current liabilities. Right? Current ratio they have given me is 4. Current assets I don't know, but my current liabilities is 31. Therefore 4 into 31 will be my current assets. Current assets will be 124. Now liquid ratio is nothing but current assets minus stock minus prepaid expenses is not there upon current liabilities minus bank OD. Bank OD is not there. I am just writing current liabilities here. They have already given me it is 2.8 liquid ratio or acid test ratio. Current assets I found out 124. Stock I don't know. And current liabilities they have only given me it is 31 lakhs. So 2.8 into 31 will be 124 minus stock. 31 into 2.8. 86.8 minus 124 will be giving me my minus stock. Minus 37.2 lakhs minus stock. So minus and minus sign cancel. So it will be positive only, no? 37.2 lakhs is the answer. Okay. Chalo, next question. P Limited furnished the following information. COGS is 6 lakhs, net profit 3 lakhs, sales return rupees 1 lakh. Okay. If net profit margin of P Limited is 25%, then the gross profit margin is how much? Come on, try. With the help of the given, try. They have given you net profit and they have given you net profit margin also. Sales return they have given a sales amount nahi. So with the help of the net profit margin, net profit upon sales na, net profit margin they have given me is 25%. Net profit is 3 lakhs upon sales. Therefore, sales will be what? 3 lakhs divided by 25%. 12 lakhs will be the sales amount. 12 lakhs rupees. Now what they have given me? Cost of goods sold also they have given me. So basically gross profit margin is nothing but gross profit upon sales. And gross profit I don't know. So I'll say COGS, sales minus COGS. Sales minus COGS. Sales is how much? 12 lakhs into 100. Now here sales is 12 lakhs. COGS they have given me 6 lakhs upon 12 lakh sales into 100. So 6 lakhs divided by 12 lakhs. 50% is the gross profit margin. GP ratio, gross profit ratio. Okay, so a sales return they have given to confuse you. If you by mistake take this as sales amount, nothing is going to go right. Okay. Chalo. Next question I am solving. Gross profit margin ratio is 50%. These are all your past exam questions. You all can definitely refer to any of your scanner you have, and I have given you the solution. They have just given you the answer. I am giving you the solution also. The relevant details of the company are given. Equity share capital is rupees 25 lakhs. Face value is 100. Profit for equity shareholders is rupees 5,15,000. Dividend payout ratio is 40%. Price earning ratio is 30. Calculate earning per share. Earning per share is nothing but profit for equity shareholders upon number of equity shares. How much is the profit for equity shareholders? 5,15,000. They have already given me this. Equity share capital is rupees 25 lakhs divided by 100 rupees face value. Therefore, number of shares I am going to have is 25,000. Sorry, 2,50,000. 25 lakhs divided by 100. 25,000. Yes, 25,000 number of shares. Therefore, 5,15,000 divided by 25,000, it is going to be 20.6 rupees. Earning per share. Okay, earning per share is very easy, and they ask also. It for you all as a, if they are asking you a 5-7 mark question, then they will ask you in a manner like how to make that net profit statement. NPBIT minus interest minus tax. So they will ask you in that form. But earning per share they do ask. Okay. Equity share capital is 25 lakhs rupees. Face value 100. Profit is 5,15,000. Dividend payout ratio is 40%. PE ratio is 30. The dividend per share will be how much? Now, basically, earning per share, we already found with the help of the same question, it is 20.6 rupees per share. Okay. Now, from that, company is giving a dividend. The dividend paying out ratio is at the rate of 40%. Therefore, dividend per share will be 20.6 into 40%. 8.24 rupees. Simple, no? The earning which I have, I already calculated earning per share in this previous sum number 7. So with the help of that, they have given me the 40% dividend payout ratio. With that, I will just use 40% of the earning per share. That much amount of dividend I am going to give to my shareholders. Clear, everyone? Chalo, next question. I think this is the last question. Let's see. Profit before interest and tax of AB Limited was rupees 3,40,000. Okay. Their net fixed assets were 2 crore 10 lakhs and their working capital is 27,70,000. How much is the return on investments? Okay. So basically they have given me net profit before interest and tax is 3,40,000. Okay. And then they have given me my net fixed assets, which is 2 crore 10 lakhs. Okay. And working capital they have given me is 27,70,000. Now return on investments is nothing but net profit before interest and tax upon, what we can do is we can do the entire investment is the amount of capital which is being used on the assets. Okay, so basically how much assets I am having, they have not given me the capital. Okay, but they have given me the assets and they have given me the working capital. So it will be nothing but net fixed assets plus working capital. So everything is just given to me. I have to put it in the formula. 2 crore 10 lakhs. Okay. Plus working capital is 27,70,000. So it is going to be 2 crore 37,70,000. Okay. So 3,40,000 divided by 2 crore 37,70,000. Percentage. It will be 1.43% return on investments. Come on, next one. Debtors velocity is 3 months, sales is 25 lakhs, bills receivable and bills payable are 60 and 3667 respectively. Sundry debtors will be how much? Okay, now first formula I am putting. Debtors velocity or debtors turnover ratio is nothing but average of debtors plus bills receivable upon credit sales. Okay, into, I am going to do this 12 because I have got the debtors velocity in months. So it is 3 months average of debtors plus bills receivable. I am going to write this as X. Credit sales, I am assuming the entire sales to be at credit into 12. So 25 lakhs into 3 divide by 12 will give me my average of my debtors plus bills receivable. So this is going to be how much? So 25 lakhs into 3 divided by 12. You will get 6,25,000. 6,25,000 is your average of your debtors plus bills receivable. Now from there, bills receivable they have already given to me. How much it is? 60,000. So basically minus your bills receivable, which is 60,000. 5,65,000 will be the amount of your debtors. Nothing I have done. I've just put the formula. Debtors velocity is your average of your debtors plus bills receivable. Why do we write average opening closing divide by 2? But there is nothing like opening closing in this sum. So it will be debtors plus bills receivable upon credit sales. Now I do not know my that debtors plus bills receivable. Okay, I'll assume that to be X. So once I get my X, that is the total of debtors plus bills receivable. They have given me my bills receivable amount. I'll come to know about my debtors. Simple. Next, I think this is the last sum. For the financial year ended 31st of March 2017, the figures extracted from the balance sheet of X Limited are as follows. We have opening stock, closing stock and COGS. Stock turnover ratio will be how much? So stock turnover ratio is nothing but COGS upon average stock. Okay, COGS they have given me. Average stock will be what? Opening 29 plus closing is 31,000 divided by 2. 30,000 is my average stock. COGS they have given me is 2,40,000. Okay, average stock divide by 30,000. Okay, 30. So this is going to be 8 times. Okay everyone, clear so far with the entire ratios? You all have any questions, any doubt, you all can ask me. Everybody is okay with everything, all the solutions? Any question you have not understood, you want me to repeat? Nothing like that? Okay. So this was it with your ratio analysis. Alright. We are going to take a break, and after the break we are just going to come for a short time. I'm going to just give you an understanding about cash flow statements. Okay. We are not going to solve many sums in that as such. I'm just want to give you a understanding of cash flow. Means what do you mean by cash flow? There are two methods. The format of that two methods we are going to just do it. Okay, so I'm going to catch back at 1:15. Okay, so we come back exactly at 1:15 and I will be done in next, like after that I'll just take your half an hour's time and we will be covering that chapter also. So see you all after a break. Hello everyone. Can you all see my screen? And am I visible? Like can you all see me? If you all can see my screen and you all can see me and you am I audible, just put your it in the chat box so that I know I can begin. I request you all to just put a message if there is any problem in the in screen or am I audible or no. Just a quick present marking if you can give me that yes you all are with me. Okay, somebody has asked a question that did ma'am say which ratios are important? All the ratios are important. The ones which I did, those are also important. Ones which they may ask randomly are also important. All the ratios are important. These are the least ratios which are there, which you have to do it. Okay, all the ratios are important. Now, I'm beginning with cash flow statements actually. I wanted to give you a brief understanding of this chapter because cash flow statements, with what research we have done in the past exam questions, even when it was MCQ, cash flow statement was a very, very important chapter. Okay, they were asking theory as well as the practical questions for cash flow for good 7 marks. Okay, 7 marks easily for old syllabus, and even for the new syllabus, if you will see a past paper December 2023, which I have already solved, in that also you have cash flow statement as a question. They generally stick to this direct method of asking the question because it was obviously MCQ papers earlier, but now with the new syllabus they might go ahead and ask you an indirect way of also solving the cash flow statements. Now cash flow statement, okay, basically what you have to understand, everything relating to cash. How much is the cash coming in and how much is the cash going out from the organization? So apart from profit and loss statement and balance sheet, cash flow is one of the foundation statement of any given company. It gives the entire reports of from where the cash has come and where the cash has been spent. See, at the end of the day, everything is about money. Financial report will show me profit, they will show me everything, there will be depreciation, etc. But how much is the liquidity in the organization? Okay, how much of receipts and payments have been done for various activities which are operating in nature, which are financial in nature, which are investment in nature? Okay, so these three important nature of transaction where cash is coming in and moving out is what is cash flow statement all about. Okay, so we have to know the net change at the end of the year in the amount of cash and cash equivalents, whether there is an increase or decrease. And cash flow statement is prepared with accounting standard 3 as the in the line with the guidelines given as per stipulated in AS3, accounting standards 3. Okay, so AS3, what do they talk about? The financial statements, balance sheet, along with P&L and income expenditure, cash flow statement, changes in equity and explanatory notes are the part of the entire financial statement included as per accounting standard 3. Okay, as per Companies Act 2013, cash flow statement is required to be prepared by every company except if it is one person, small and dormant company, then they don't have to prepare. Okay, for non-companies also AS3 is not mandatory for entities which are falling in level 2 and 3. Now, what are the important items? One is cash. Cash in hand, cash in the bank. Cash equivalents are always those short-term and very highly liquid investments which can be converted in cash easily. Okay. Cash equivalents are held for purpose of meeting short-term cash commitments. Okay, rather than for investment or for any other purpose like treasury bills, commercial papers. Okay, any kind of short-term investment which now if you will sell in the market, you will get money. Okay, so cash flows are inflows and outflows of both cash and cash equivalents. The difference between the inflow and outflow will give you net cash flow, which can be either or net cash inflow and which can be net cash outflow. Okay. Now, utility of cash flow analysis, it helps in efficiency, cash management, internal financial management, discloses movements of cash, okay, success or failure of cash planning, evaluating management decision, relationship of net income to changes in the business cash, efficiency in cash management. This is all just read. And then there are few limitations also given. Now, classification of cash flow statement is what is very, very important. Okay, the three main categories of cash flow is operating, investing and financing activities. So, cash which is inflowing and outflowing due to the operations of a given organization. Okay, so operating activity we keep it separate. Financial activities are the cash coming in or moving out due to the finance or the funds or the capital which you have. Okay, so issue of shares, redemption of debentures, all that is like a financing activities. And investment takes place when you are doing, like you are investing the money in a plant, investing a money in a building. Okay, or you are selling that investment, so there will be an inflow. Okay, so inflow and outflow about operating activities and about the financing and investment activities is important. A business normal operations results in both cash receipts, cash payments. Why will we receive cash? Because we have sold goods, provided services. Okay, operative expenses and other things, purchases will be cash moving out, disbursements. Revenue and expenses reported in the income statement, they do not give you the actual view, okay, of the cash inflow and outflow. Okay, because here in cash flow we are looking up cash receipts and cash payments. Income statement we do it on accrual basis, whether cash is received or not. Okay, so going to the two important methods. One is direct method. Generally, they happen to ask you questions from this method only because the indirect method is very lengthy. Okay, direct method is very simple. They will give you a few activities. From there, you have to bifurcate in three heads: operating, investing and financing. Okay, and whether it is a cash inflow or outflow. Okay, so usual cash receipts from and cash payments resulting from operating activities will be your day-to-day operations. Basically, your business is that. So, your cash will be generated due to the sales of goods and services. You will collect cash from debtors. There will be cash receipts of interest or dividends. Okay, in case your business is into this, shares. And like you are say underwriter or something, you are a financing company itself, so then for you cash receipt on interest and dividends also will be there. Then there can be certain cash receipts of commissions, fees, other revenues, payments to suppliers, payments for other operating expenses like rate, rent, power, wages, salary, and income tax, all related to the operations. Okay. Important formulas. Okay, if I want to know what is the actual amount of cash collected from the debtors, I will see my opening balance of the debtors plus how much is the credit sales generated minus the closing balance will get me cash collected from debtors. Same is cash paid to suppliers. Opening balance of creditors, add the credit purchases done during the year, closing balance of the creditors. Payment to employees, how much was the outstanding salary, add the salary for the current year minus closing outstanding salary will be the amount of salary paid. Interest paid, opening the outstanding interest plus interest for the current year minus closing outstanding interest. Similarly for insurance paid, it will be opening insurance expenses of the current year. Okay, insurance expenses plus closing prepaid. Okay, yes, insurance paid, closing prepaid insurance also. Generally insurance is always paid prior, okay, a year prior. So insurance expenses of the current year plus the closing prepaid insurance, we always prepay that, minus the opening prepaid insurance. This is a little different. Why? Because the payment for insurance premium are made at the beginning of the year and not like rent etc., which is done at the end of the year. Okay. Then we have indirect method, where you have to net profit, you have to adjust it with non-cash expenses like debentures, depreciation, then any kind of your non-operating expense, non-operating income, okay, any deferral in past or future operating cash receipts or payments. Okay, so all that you have to adjust with your net profit with, and then only you will get your operating net profit. Okay, and cash from the operating activity. So that the indirect method also we will solve one sum so that you get an understanding. Cash flow from investment activities is relating to all your assets. So if you are acquiring a fixed asset, okay, and you are paying for that, whether it is tangible or intangible in nature, you have received you to dispose of that fixed asset. Okay, cash payment to acquire shares, warrants, debt instruments of other enterprises and interest in joint ventures. Okay, then cash receipts from the disposal of the shares, warrants, debts, cash advances and loans made to third parties. Okay, other than advances and loans made by financial enterprises. Financial enterprises work, operation is only to give loans, it will go in operating activity. Okay, then cash receipts from payments, repayments of advances and loans other than the financial enterprise. Cash payments for future contracts, forward contracts, options, swap, etc. All this is investment, it is not the business of the company, right? So cash flow from investment activities is relating to your assets and all the other investments. Last is cash flow from the financing activities, that is your own loan and equity funding. Okay, so you are issuing shares, there will be inflow. You are issuing debentures, inflow. You are redeeming debentures, outflow. You are prepaying your loan, outflow. Okay, so all from the financing activities. Now treatment of certain special items, this you can just go ahead and read it. But now say for year. Okay, now there is one element known as interest paid. If it is a financial enterprise, it is their operations. It is a day-to-day activity of payment of interest or receiving of interest paid. It is going to be their operating activity in case of financial enterprise. But if it is interest paid for any other enterprise, we will treat it as a financing activity and not operating. Our business is not to give interest or pay interest. Okay, we have borrowed some loan, financed it, and based on that we are paying interest. So it will be a financial activity. Dividend paid. For a financial enterprise, it will be a financing activity only because they are going to pay dividend on their shareholders, equity shareholders, no? So it is their finance and they are going to pay dividend on that. So for both financial enterprise or whether it is another enterprise, dividend paid is going to be a financing activity. However, dividend received is going to be an operating activity because they are into finance. Their business is to, hold shares or become a shareholder of another company, because of which they get dividend. Okay, so financial enterprise, if they are receiving interest, if they are receiving dividend, it is their operations. But for others, it is going to be investing activities. I have invested in other company and I have received it. But for financial enterprise, it is going to be an operating activity. So this is a very important chart or table from this particular page. Clear? Then tax on income. Yes, obviously you have to know the tax amount arising because that is a kind of a cash flow outflow. Non-cash transactions is due to depreciation, non-operating income expense, goodwill written off. All those are non-cash transactions. Now format of cash flow statement, direct and indirect. First I will show you a direct and we will solve 1-2 sums on that. Okay, direct method, 3 headings: cash flow from operating, cash flow from investing, and cash flow from financing. Okay, this will be the maximum things which will be given in the sum. So cash from operating activities, cash flow. Now inflow or outflow, we will decide whether we are getting a positive number or negative number. Positive number, that means that is an inflow. Negative number, it is an outflow. So I'll start with receipts from customers minus any cash paid to employers or suppliers, etc. I'll get cash from operations. I will remove my tax paid. I'll get cash flow before extraordinary items. If there is any kind of extraordinary items because of which I have received cash, I have received some kind of a subsidy, some earthquake disaster settlement, something relating to a pandemic settlement, I received some kind of a subsidy from government, I will add it because it's a cash flow. Okay, this is a direct method. Okay, then cash flow from investing activities. Say I have purchased fixed asset minus. Then I sold one asset, one equipment. I will get cash flow received. Right? I have received interest. I have received dividend. So cash from investing activity. Due to my investments in other companies and organization, I'm getting interest. I'm getting dividend. Cash flow from financing activities. I got shares. Okay, share capital I issued. I got money. I took a loan, I got money inside. I repaid a loan, so minus. Interest I paid minus. Dividend I paid, it will be minus. So net cash from financing activities. So net increase and decrease in cash and cash equivalent will be A plus B plus C. You add opening, whatever was available with you at the opening of the year, you will get the closing, that is at the end of the period. Okay, everybody, any doubt you all have so far? Any questions you want to ask? I will take up one simple question, okay, and we will try to solve that sum, okay, and then we will go to the indirect method. In indirect method also, investing activity and financing activity remains the same. Only operating activity changes, bas, nothing else. Only for operating activity we have to do a little bit of adjustments. Because in that, no, they will give us profit. They will not give us paid to supplier, etc. and all that. So with the profit, we have to do the adjustments. Okay. So now, taking this illustration, the following information is available from the books of Exclusive Limited for the year ended 31st March 2005. Cash sales for the year are rupees 10 lakhs and sales account is 12 lakhs. Payments on accounts payable for inventory total 7 lakh 80. Collection against account receivable was 7 lakh 60. Rent paid is 2 lakh 20. Outstanding rent is 20,000. 4 lakh equity shares of rupees 10 each were issued. So 48 lakhs. Okay. Means they must have issued at premium. Equipment was purchased for cash. Dividend amounting to 10 lakhs were declared but not paid. Rupees 4 lakh of dividend was declared in the previous year, was paid this year. Equipment having book value of 1,60,000 was sold for rupees 2,40,000. The cash account was increased by 37,20,000. Now that we will see whether we are getting this 30,70,000 or not. Now the first statement, cash sales for the year, this is going to go, no? It is going to be operating activity. OA, positive. Just write it. It is going to be operating activity. Then sales on account is 12 lakhs, but cash sales. Cash sales is only what I am considered with cash inflow. Payment on accounts payable for the inventory, raw materials, etc. which I have. This again, this will be operating activity minus. Collection against accounts receivable, operating activity plus positive. Rent paid in cash is 2,20,000. Okay, so rent paid, operating activity negative, actual rent paid. In direct method, I'll take everything actual cash. 4 lakh equity shares were issued for 4,80,000. Means 48 lakhs, sorry. Means it was for a premium. So this is going to be my financial activity positive. Equipment was purchased, investment activity negative. Dividend was declared but not paid. I will not do anything to this. But 4 lakhs rupees dividend which was declared previous year, it is now being paid. So it is due to the financial activity negative. Equipment which had a book value of 1,60,000 was sold at 2,40,000. So this 2,40,000 is important for me. Investment activity positive. Okay, now based on this we will see whether we have a increase by 37,20,000 or no. Chalo, let's check. Okay, so I am making this statement. You can write like this: cash flow statement as on this date. Okay, so you have particulars in the books of whatever, in the books of exclusive limited, you can write particulars, amount and amount. This is how we are going to format it. Okay, Roman number 1 or A, you can write A. If you want, you can write A. Okay, cash flow from operating activities. I am writing in short form. You all can write it properly. So first one was cash from sales, 10 lakhs. Okay, minus cash paid to suppliers. I have already given in the question the markings. Okay, 7,80,000. Then we also had collection against accounts receivable. So add collection against receivable. Against receivable. How much was that? 7,60,000. So this is a positive. And minus we have rent paid 2,20,000. Okay, so we have cash inflow or outflow from operating activities. Just check first, add 10 lakhs and 7,60,000. And then from there minus 7,80,000 minus 2,20,000. You will get 7,60,000 positive. Okay, 7,60,000 cash inflow. Inflow from operating activities. 7,60,000. Okay. Now B, cash flow from investing activities. In investment, I have only two things. One, I have purchased an equipment. Purchase of equipment, 16,80,000. So this I'll put in minus, and there is one add sale of equipment. Value of the equipment was 1,60,000, but when I sold, I got 2,40,000. So cash outflow from investment activities, 16,80,000 minus 2,40,000, 14,40,000. And C will be cash flow from financing activities. In that we have some issue of shares, so money is going to come in issue of shares, 48 lakhs rupees positive, and we have some dividend paid, so minus dividend paid 4 lakhs. So here we have cash inflow from financial activities, which is 44 lakhs. Therefore, net increase or decrease in cash and cash equivalents will be A plus B plus C. So whatever is positive first add. 7,60,000 plus 44 lakhs. And then minus the negative 14,40,000. 37,20,000. This is the answer. And they have already given us that. Okay, there was a net increase and decrease. So if you will not get this, means we are gone wrong. Clear? Okay, anyone, any doubt? You all have any question? Come on, now the next sum. There is one more question I have taken. This you all can solve it by yourself. I will just give you whether it is operating or what it is. Madhuri Limited gives you the following information on 31st March 2006. Sales for the year total 96 lakh. The company sells goods only for cash. Okay, so this is going to go as operating activity positive. Cost of goods sold was 60% of sales. So from the cash sales, you will minus this because this is your outflow. Okay, so basically operating activity minus it from the sales. Closing inventory was higher than the opening inventory by 43,000. Okay, so when the inventory is more, that means my cash is going, like I'm not getting the cash. No, if I will have more inventory closing stock more with me, that means that much of less cash I have with me. Higher the closing stock, it is going to have a negative effect on my operations. So operating activity I will subtract. Okay. Then trade creditors as on 31st of March exceeded those on 31st of March 2005. From opening to closing, means closing are 23,000 more than the opening. So basically my trade creditors has increased. Trade creditors means I am getting my cash is prevented from flowing out, so it is like a positive operating activity. There is an increase in creditors basically. That means I have not yet made the payment. So there is a positive operating activity. Tax paid amount, operating activity only you will take. Okay, in tax paid, negative. Depreciation on the fixed assets was 3,15,000, whereas the other expenses was 21,40,000. Now this other expenses I'll take. Depreciation is a non-cash expense. So operating activity, subtract. Okay. Outstanding expenses, opening, 31st March 2005 means opening, was 82 and closing was 91,000. That means there is an increase in outstanding expenses. Increase in outstanding expenses means I have prevented the cash to flow out. So increase in outstanding expenses will be operating activity positive. Okay, so this was all relating to operations. Now see, new machinery and furniture was purchased. So this is going to be investment activity negative. Right issue of 50,000 equity shares of 10 each, premium rupees 3 was made. So this is going to be financial activity positive. Dividend of 4 lakhs was distributed, financial activity negative. Cash in hand and at bank, 31st March 2005, last year, that means this year's opening is 2,13,800. You are supposed to prepare the cash flow statement. So I'll do it for you over here only. Cash flow statement. Solution number 2. Same thing, particulars and amount. Okay. Quickly, cash from operating activities. Okay, I'm not writing everything. I'm just writing operating activities. You all have to write cash flow from operating activities. All the sales are in cash. Cash sales 96 lakhs. No, it is. Minus COGS, because that is the expenses which have been made, 57,60,000 I'm getting. It is in a form of percentage, I believe. No. Yes, 60% of sales. So it will be 57,60,000. 60%. Correct? Higher the closing stock, that means there is a decrease in my operating activities. Higher closing stock. 43,000 minus. There is an increase in creditors. That is a positive thing for my operations. 23,000. Okay. Then there is taxes paid. Money is going to move out. 7 lakhs. Outstanding expenses increased by 9,000. And there are other operating expenses other than depreciation, other operating expenses which is amounting to 21,45,000. Okay, so when you will do addition, you will do addition of 96 lakhs plus 23,000 plus 9,000 and then you will subtract all the negative numbers. You are going to get cash flow, inflow from operating activities, which will be 9,84,000. For MCQs, they ask you only this particular one activity only. Then B is cash flow from investment activities. In investment activities, I have only one, purchase of machine. Okay, so it is 10,27,500 negative. So cash flow means there is cash outflow from investment activities, 10,27,500. And then we have C, we have only two things, cash flow from investment, no, done, from financing activities. We have right issue of shares. Right issue of shares. 10 rupees share at 13 rupees, 50,000. So 50,000 into 13 rupees. So 65,000 rupees is going to come in. Minus dividend paid. Dividend paid is of rupees 4 lakhs. Okay, it was going to be 6,50,000. Yeah. 4 lakhs will be dividend paid. So there is a cash inflow from financial activities to the extent of 2,50,000. Now net change, increase or decrease? Net increase or decrease in cash and cash equivalent will be this A plus B plus C. So first add A and C, because two positive, first add and then subtract. So it's going to be 2,06,500. Okay, from that I am going to add the opening which they have given me. Opening cash and cash equivalent, they have told me it is 2,13,800. So closing is going to be 4,20,300. Closing cash and cash equivalent. All right. Come on. Now I'm moving to the last sum, which is an indirect method. From the following balance sheet of A Limited, make out the statement of cash flow. They have given me balance sheet opening and closing last year and this year. Okay, so 1999 and 2000. Share capital, there is preference shares, general reserve, P&L, proposed dividend, creditors, bills payable, provision for tax. For proposed dividend and for provision for tax, last year's declared will be paid this year. Okay, even in proposed dividend, even for provision, last year's provision will be current year's payment. Goodwill, land and building, plant, debtor, stock, bills receivable, short term investments, cash in hand. Okay, so this is your cash and cash equivalent. Cash and cash equivalent. Okay, short term investments and cash in hand. All this is your current assets. Okay, then you have these as current liabilities. And this is your share capital, preference, etc. And then your P&L and reserves. What we need to do is we have to make ledgers for the fixed assets. Okay, wherever we have any kind of a adjustment, that ledger we will open only to find the flow from operating activities, because here they have not given me anything, right? For financial activities and investment activities, I will show you what has to be done. You have to compare the balance sheet. Now see this, depreciation of rupees 10,000 and 20,000 have been charged on plant account and land and building respectively in the year 2000. Interim dividend of 20,000 was paid in 2000. Income tax 35,000 was paid during the year. Short term investments are sold for 3,000 rupees. Okay, fine, that is it. So for this I am just preparing working note. Okay, I am showing the journal entries and the ledgers first, and then I will prepare the cash flow statement. Now journal entry I am passing only for the adjustments. Okay, so depreciation means depreciation account debit. I have depreciated my plant and I have depreciated my land and building. So land and building is how much? 20,000. And plant is 10,000. So total depreciation is 30,000. Second one is interim dividend is paid. So basically interim dividend account debit 20,000. If I am paying, I will pay through cash or bank. So I can write cash and cash equivalent here. right? Then I have my income tax paid. So income tax account debit 35,000 to cash and cash equivalent 35,000, right? And then the last one is short term investment was sold at a profit of 3,000 rupees. Okay, so short term investments, I was standing at 15,000 in 1999 and now I have got 10,000. Okay, so this 15,000 I have kind of sold it. Okay, so when I'm selling it, I'm getting a profit of 3,000 more. So when I sell and I'm going to hit my bank account, right? So bank account debit, I'm going to get my money in. How much I will get? That 15,000 plus 3,000 of profit. So 18,000. Okay, to my short term investments, what I sold? 15,000. To P&L account, profit transferred to P&L account 3,000. Right. Now, so if I say instead of bank, can I write cash and cash equivalent like how I wrote over here? And can I write cash and cash equivalent even for my short term investments? Right. Therefore, my net entry here, it will be cash and cash equivalent account debit 3,000 to P&L account 3,000. Okay. Now all this I am going to make a ledger. I will first make a ledger of plant, then of land and building. Okay, then we can make a ledger for tax. Okay, and P&L appropriation is a must. Only with the help of P&L appropriation account we will be able to find the profit, net profit before tax. Okay, so we are going to make these ledgers. First I am making land and building, small ledgers. Then I have plant and machinery. Okay, just write the opening and closing balances from the balance sheet. So land and building 2 lakhs and 1,70,000, plant is 80 and 2 lakhs. Okay, so just write that. So land and building to balance brought down was 2 lakhs, by balance carried forward will be 1,70,000. Then I have got depreciation. So by depreciation, land and buildings depreciation is how much? 20,000. So when I will close this account, nothing is there. Now I have to close it. Okay, so this is 2 lakhs, 2 lakhs. So there is a balance of 10,000. That means what? I have sold this by sale. 10,000. This will go in my investment activity. Sale of land and building. Okay, investment activity positive. Plant and machinery also I will do it in the same manner. To balance brought down. How much it is? 80,000. 1 minute. Plant and machinery. To balance brought down 80,000. By balance carried forward, opening and closing I am writing, just that's it, nothing else am I doing. By balance carried forward they have given me it is 2 lakhs. By depreciation it is 10,000. So I am going to close this now. When I will close, I come to know here it is 2 lakh 10. Here also I will have to write 2 lakh 10. So there is an increase in plant and machinery. That means there was a purchase made of 1,30,000, balancing figure. So this will go again in investment activity negative. There is a purchase of plant and machinery. Okay. Similarly, now I will make it for income tax. Okay, I told you, previous year will be paid. This year is kind of a provision. But in order to know actual amount of income tax paid, I will make a ledger. Okay, first income tax is a liability. So by balance brought down. 40,000 opening, to balance carried forward. The closing is 50,000. Okay, then I have passed one journal entry. See here, income tax account debit. That means I have paid this. So I am going to debit it to cash and bank by 35,000. And then I will close it. Okay, so 85 and 85. So this is going to be by P&L appropriation account. That means I have made provision for 45,000 now. Clear? And then the last one I will make is the P&L appropriation account, which is very easy. P&L appropriation. Okay, just make this account. All the details I'll put here and I'll be able to get my profit. Profit and loss appropriation account. I'll know my opening and closing with the help of my balance sheet. Okay, they have given me by P&L. So by balance brought down, to balance carried forward. Let's see what is the opening and closing of P&L here. 30,000 and 48,000. Okay, 30,000 and 48,000. So I will write it over here. 30 and 48. Okay, now I have paid this interim dividend, no? Interim dividend is paid. So it is an expense, it's a P&L account expense. So I will put this also in my P&L appropriation account. Correct? So interim dividend paid. After this profits and all happened, I have paid my interim dividend. That means I have removed it from my P&L appropriation, this 20,000. Then I also did two provision for tax. 45,000, just the ledger above here. This year's provision I did 45,000. Okay. Then to transfer to general reserve. How I came to know that? If I will see my reserves. Okay, my general reserve from 40 it has become 70. How that money came inside? Whatever profit I must have got from there, I am retaining some profit, no? That profit I put in general reserve, right? So that is the transfer. I am appropriating my profit to all this. I have appropriated my profit with dividend, with provision for tax, with transfer to general reserve, which is 30,000. Then there is a proposed dividend. Proposed dividend for the current year I will take, which is 50,000. Okay, all these provisions and propose etc. After the profit has been generated, I am appropriating this profit. So the total you will get is 1,93,000 over here. And opening was 30,000. That means you have got net profit before tax of 1,63,000. Only because of this you were able to appropriate all this. So we are doing a reverse working. Okay. So if ever this question is asked, always prepare the journal entry and the ledgers for the adjustments given. First the journal entries. With the help of that, the fixed assets, you prepare the ledger for fixed assets. For income tax also prepare the ledger so that you know the actual provision for the tax in the current year. and one is P&L appropriation account to find the net profit before tax figure. Okay. Current assets and current liabilities, I will show you how to deal that. Okay, and rest everything will be your financing activities and investment activities. Investment activities also be found out with the help of the ledgers, okay, of plant machinery. Now see this cash flow from the operating activities. How will I find that first? Particulars, amount. Investment and financing is very easy. I am more concerned with cash flow from operating activity. I will start with net profit before tax. I have to work in the reverse manner. So 1,63,000. If there is any interest, I have to add it back. Add back the interest. There is no interest. Add back depreciation, because interest is a financial activity, no? Payment of interest. Add back the depreciation, which is 30,000. Add back goodwill written off. Now I'll show you where it is. There is a goodwill. This is also non-cash expense. You're just writing it off, okay? You're not doing anything. You're just writing off the goodwill. So here, goodwill in 1999 was 1,15,000 and now it is only 90,000. That means this difference of 25,000 is written off. So add that back. Okay, goodwill written off. Add back 25,000. Add back any kind of a non-operating expense. Non-operating expenses. If there is any, there is no non-operating expenses in this sum. Minus non-operating income. If there is any kind of a non-operating income, you will remove it. Yes, there is an income of 3,000 rupees. Short-term investment sold at a profit. This is not my business. Okay. So there is a non-operating income. So when I will do this, all these adjustments, I will get my net profit or cash from operations. Cash from operations before working capital changes. Before working capital changes. So this is going to be somewhere 2,15,000. Now I will have to do the adjustments of my working capital. Okay, my current assets and my current liabilities are also generated due to my operations. So whether there is an increase or decrease in my assets, like how we did in second sum, there was an increase in closing stock, there was a decrease in the creditors or decrease in outstanding expenses. So same thing I will have to do it over here. Okay, so I will always add back increase in the liabilities. Okay, I will add back increase in the liability and decrease in the assets. Okay, why? If I'll decrease the assets, means debtors are decreasing, that means money is coming in, no? And I will subtract any decrease in liability because payment is made and increase in the assets. Okay, this is what I am going to do for working capital changes. Okay, so let's see our question and see our current assets and current liabilities. Now if you see our current assets, this is done. Land and building is done, plant is done, over. Okay, this land and building and plant will go in my investment activities though. But I have made the ledger and kept ready. Now debtor, stock, bills receivable. This will go in cash and cash equivalent. I am worried about this 3. So there is an increase in the debtors. Okay. Then there is an increase in the stock and there is an increase in the bills receivable also. Okay. So whatever the assets are increasing. Assets are increasing. If assets are increasing, I am going to subtract. Okay. So if assets are increasing, I am going to subtract. All the assets, all my 3 assets are increasing. Okay. So minus increase in debtors. Then I have minus increase in bills receivable, and I will also subtract increase in stock. Okay, so debtors have increased by 40,000. Bills receivable has increased by 4,000 and stock has increased by, no, bills receivable has increased by 10,000, sorry. Bills receivable is increased by 10,000. And stock has increased by 32,000. Okay, I have done it and taken it from the balance sheet only. I am not doing anything by myself. See here. Debtors 1,60,000 it was. It has become 2 lakhs. 40,000 has increased. Stock was 77. Now it is 1,09,000. 30,000. 32,000 it has increased. Bills receivable has increased by 10,000. And in case of my liability side, I will see my creditors and bills payable. Okay. So my creditor, only this two, I will see it for my liability, because proposed dividend and provision for tax. Tax related I have already done. Okay. Tax paid, for that I have made a ledger. Dividend is a activity which is in a financial in nature, no. So creditors has increased. Increase in the liability from 55 it has become 83,000. So 83,000 minus 55,000, 28,000. And bills payable has decreased. There is a decrease in the liability by 4,000. So if my liability is decreasing, means bills payable decrease means what? I made a payment, no. So this will go in negative, and increase in creditors will be a positive amount. So write it over here. It will be increase in creditors by 28,000, and there is a decrease in bills payable by 4,000. Okay, so then you will have operating profit after working capital changes. Okay, so whatever is your amount, 2,15,000, in that, okay, it's a positive 2,15,000, right? So in that, add back your 28,000 first. From there, then subtract all the others. 40,000 minus 10,000 minus 32,000 and minus 4,000. You will get 1,57,000. Minus income tax paid. That is 35,000. No, we paid. Therefore, there is a cash inflow from operating activity. 1,22,000. Okay, so this was important in case of indirect method, where they will not give you anything. They will give you opening and closing balance sheet. With the help of that, you will have to find the net profit before tax. For that, you have to make the P&L appropriation account. For P&L appropriation, you will have to make the ledgers of your adjustment entries. Clear? Okay. And then based on that, all this is the fixed format. In NPBT, you will add back the interest, you will add back the depreciation, you will add back any kind of fictitious asset written off, goodwill, any other fictitious asset. You will add back non-operating expenses and subtract non-operating income. You will get cash flow from operations before working capital changes. Then go back to your balance sheet and see your current assets and current liabilities. In that, if there is an increase in the liabilities, okay, you are going to add it. Increase in the liabilities and decrease in the assets, you are going to add it. And if there is a decrease in the liability and increase in the assets, you are going to subtract it. Okay, this is the understanding about how to do working capital changes. From there you will actually now subtract the income tax paid and cash flow from operations, okay, operating activities. Then with that we will do cash flow from investment activity, B. Okay, cash flow from investment activities. We have only two things, that land and building and plant and machinery. So we have sold, sale of land and building, no, for 10,000. So this will be positive, and then minus purchase of plant and machinery, 1,30,000 we have done purchase. Okay, so I have cash outflow from investment activities by 1,20,000. Okay, and C is cash flow from financial activities. Now for financial activities I will see my shares first. See, my equity share capital has increased by 1 lakh rupees. That means there was an issue of shares here. From 3 lakh it has become 4 lakhs. Preference shares have reduced. That means there was a redemption. In case of proposed dividend, last year's will become current year's paid. Okay, and then there is one interim dividend also paid. So all that I am going to take it in my financing activities here. One is issue of shares. With issue of shares I got some 1 lakh rupees. Then I did redemption of preference shares by 50,000. Then I also have an interim dividend paid. Interim dividend was 20,000, and I have a proposed dividend now paid. Okay, dividend paid, actual dividend paid for the current year. It will be the dividend of the last year. Last year will be paid. That is 42,000. Okay, so there is a cash inflow from financial activities. See, cash inflow from financial activities to the extent of 12,000. So there is an inflow from finance, there is an inflow from operations, 1,22,000. You see this, and there is an outflow from investment activities. Okay, so there is a net increase. I'll write it here. Net increase or decrease in cash and cash equivalents. Okay, 12,000, 1,20,000 and 1,22,000. Okay. It is coming positive or negative? 1,20,000, 1,22,000 plus 12,000 minus 1,20,000. Okay, 1 minute. There is something wrong here. There is 1 lakh minus 50,000 minus 20,000 minus 42. Okay, sorry. This is a cash outflow. Minus 12,000. So minus 12,000 means 1,22,000 minus 1,20,000 minus 12,000. Okay, so there is a net decrease. Okay, 10,000 is actually decrease in cash and cash equivalent. You get a minus number. Add opening cash and cash equivalents. Now how will I come to know cash and cash equivalents? Opening, it will be cash in the hand, cash in bank, and short term investments. Okay, so let me see in the balance sheet how much it is. So cash in hand, and my 15,000 was my short term investments. Cash in hand was 10,000 rupees. Okay, plus I got an addition 3,000 rupees when I sold that short term investments. Correct now? So I got that all in the current year. So I'm going to add it here. Opening, it will be cash and cash equivalent. It will be 15,000 plus 10,000 plus that 3,000 of cash and cash equivalent. We have it in the journal entry also. So this is going to be 28,000. So you will get closing cash and cash equivalent as positive 18,000. Closing cash and cash equivalents. Okay, so let me see whether I have that positive 18,000 in my cash and cash equivalent. See here, cash in hand. Okay, sorry, this two, cash in hand plus short term investment closing 18,000. I got my answer also 18,000. That means we have done it correctly. Okay, so it is going to be cash in hand plus the short term investments. Okay, that is 8,000 plus 10,000. So this is your answer. Okay, everyone, this will be your net increase and decrease. I'm giving you all some time to take up the screenshot for all this, starting with the journal entries here. Journal entries and the ledgers which we have to prepare. Here are the ledgers: land and building and plant and machinery, and then you have income tax and P&L appropriation account. Here, income tax and P&L appropriation. After that we did cash from operating activity, cash flow before working capital changes, then you have changes in the working capital, minus income tax paid, you'll get cash inflow from operating activities. And then you have cash inflow from investment activities and cash inflow from financial activities. And last is the net increase and decrease in the cash and cash equivalents. Okay, everyone. So this was it for the cash flow statements. Okay, kindly do the direct method. Concentrate on the direct method more because this is really very lengthy. Okay. If you have taken up my dream batch, I've solved many more sums on indirect method also, in order to you all know how to find working capital changes, because these can be asked for MCQs also. So you can do those practice from that particular dream batch lectures. Okay, full lectures where I have solved many sums in cash flow. Otherwise, if you all want to revise only to the extent of, since you have less time, you want to do only what is ever important, direct method, please focus on that. Try to solve more and more sums if you can. Okay, everyone, thank you everybody, and I wish you all the very best for all your papers. Please do well, give your exams with a calm mind. If it is difficult, read the question 2 times, leave it for a later part, and then start solving the other questions which you know. Okay, so I am wishing all of you very all the best, and hope you do well, and we are here to help you always. Okay, bye everyone.